Oil prices to the moon? Well, maybe not. That's coming up on 3 Minutes on Markets and Money. Goldman Sachs out this morning talking about oil prices going to $105 a barrel. Now, that would be the highest level we've seen since really 2014, 2015, when the Fed was starting their balance sheet taper reduction. Of course, shortly after that, oil prices collapsed to about $30 a barrel. Are oil prices slated to go higher now? Well, there's certainly some arguments for that because of supply-demand imbalances, as well as we have a strong recovering economy. We had lots of liquidity pumped into the system that caused inflation, and that's showing up at the pump. Now, is that going to last, though, later into this year? And what should you be doing with your energy stocks right now? That's the big question. Now, yesterday, we began taking profits out of some of our energy stocks simply on a technical basis. Energy stocks are now trading 3 standard deviations above their 50-day moving average. Again, a very bullish trend for energy stocks right now. They've just gotten a bit ahead of themselves. And importantly, as we look at our money flow indicator, as we got our buy signal and our money flow indicator back in December, that's been a very nice rally now for energy stocks here. But again, that indicator is now extremely overbought and very close to triggering a sell signal. At the same time, we're just in a very overbought condition of the market as well. And typically that does precede at least a short-term correction and pullback in prices. So taking a little bit of profit here out of some of your energy stocks certainly makes some sense. But trying to add new positions here to chase the markets, you may want to be a little bit cautious here. Again, just with the overall kind of mass extension of prices, the opportunity to add exposure here is likely not that opportunistic. There is another concern, though, as I show you on this other chart. Going back in history, back 25 years, when the Fed begins a rate hiking campaign, oil prices tend to decline. Why is that? Because once they begin hiking rates, that extracts liquidity from the markets. Of course, also it reduces economic activity because higher rates slow down the economy and slow down the rates of inflation. So not surprisingly, the price of oil tends to fall with higher interest rates. Now, not initially, but once the Fed starts to really get into the rate hiking campaign, we would suspect that we're going to see lower oil prices as the economy begins to slow. With the yield curve now already flattening and not that far off of inversion, that's going to suggest we could see an economic recession sooner. In other words, the Fed can't hike rates that many times before we really impact the economy. So again, just be a little cautious here with your energy stocks. Again, I'm not saying sell everything. All we did was reduce our overweight positions back to target weights in portfolios. Again, these positions tend to be good, strong companies right now, particularly in a risk-off type environment with this value growth transition that we're going through. It's just a little extended at this point, so some profit taking certainly makes some sense here. And don't completely disregard tech at this point, which is now exceedingly oversold at this point. Our money flow indicator is very negative, extreme oversold condition, and markets are now trading into 3 standard deviation territory below moving averages. So a counter trend rotation between energy and technology certainly would not be surprising at this point. Again, that's not a long-term change, but a short-term rotation would certainly make some sense here. So let some of the contrarian nature work in your portfolio management. Get by the website, realinvestmentadvice.com, with any questions or comments. Get our latest blog post, newsletter, and access to simplevisor.com, our fully automated research system. It's all on the website now, realinvestmentadvice.com.